Good afternoon, everybody. Hello, welcome. Welcome to the next in the Admirals Trading Spotlight webinar series. I'm Paul. For those of you who don't know me, who've never joined before, you're very welcome to this session on why the US dollar is so important in FX trading. If you're joining us here today, as I said, you're very, very welcome. I appreciate that we have a truly global audience. We have people from all over the world. Wherever you are, you're very welcome. I hope you and your family are well during these rather torrid times that we find ourselves living through. If you're watching this later on YouTube, great, super, have you here. Be sure to subscribe to the YouTube channel, give us a like, give us a thumbs up if you find this useful, or even if you don't, you can give us a thumbs down. That's okay. We appreciate all of the feedback. But as I said, here we are today to talk about why is the US dollar so important to FX trading. I appreciate that, if you've traded FX, for a while, you probably already understand this, but, for people new to the market, new to sort of trading, this gives you an opportunity to sort of, understand another part of the FX market on a kind of a deeper level and understand its relevance and also how those kind of intermarket relationships may well work for us. So without further ado, let's switch across to the charts. And let's crack on with the kind of the main part of the session. So just bear with us a moment. Let's just try and bring these slides up here for you. So hopefully we can. Here we go. Brilliant. Boom. Excellent. Excellent. Okay. So why is the US dollar so important in trading FX? I hope you can see me. I hope you can hear me. Great to have you here, Darshan, as always. Okay, very welcome. This is one of those topics that is unbelievably important. Okay, if you're going to trade anyway, but also certainly if you're interested in trading FX markets, because it's key to understanding, what underpins those FX markets, and also how do you turn that information into something that you can actually utilize in your own particular trading. So remember here, Admirals, they're a global broker with local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products, allowing you the opportunity to engage with markets on both the MT4 and MT5 platform. If you have any questions about Admirals, please get in touch with account representative, and they'll be very happy to help you. And if you want more timely content from the Admirals team, well, then be sure to subscribe to Admirals Telegram channel. You can see it there at Admirals. They'll be able to give you just a little bit more, as I said, a bit more time sensitive content that you can utilize in terms of actually insight into markets, or even just information on when the next bit of fabulous Admirals content is coming out. So what should we talk about today? What we're going to cover in terms of looking at our topic? Well, yeah, we'll talk about why is the US dollar so important. All right, what is it that that makes it sort of the kind of cornerstone of, well, pretty much everything to do with international trade at the moment. We'll look at the role it plays in financial markets, and of course, not unsurprisingly, we'll talk about how you can use it in your trading, and then maybe even ways to trade it. And if there's time at the end, what we'll do is we'll switch across to the Admirals platforms, and we'll have a look there at what we can do in terms of setting up our Admirals platform in order to be able to sort of give us an insight and find ways to trade it. So be sure to stay with us till the end. You'll see that my wonderful assistant there, Nastia, has put up a link there for the Telegram channel. If you're not part of it now, give that a click and you'll be able to be taken straight there as well. For those who don't know me, my name's Paul. I've traded for many years now. Okay, I've traded for hedge funds, I've traded for high net worth clients. Primarily, I look to sort of focus on FX indices and commodities. That's where the bread and butter of my own trading is. And I'm a trend trader for longer term positions, swing and longer term positions. And I'm a reversal trader for kind of intraday trading. That's the way I particularly like to operate. Hartmut, hello, good afternoon to you. Great to have you here. Okay, as I said, it's I always appreciate that we have a wide range of experience of people here who come and join us in the sessions, and also we have a truly global audience. You're all very welcome. It's great to have you here. It'd be interesting to know, what has been your own experience of trading the US dollar. Do you really understand the kind of significance of it? As I said, it's always great to hear other people's comments and thoughts. It always actually kind of just adds to the adds to the, let's say, to the kind of the richness of the conversation and debate here in the trading spotlight sessions. So let's dig in. All right. It'd be interesting to know, why do people, people here, why do you think that the US dollar is so important in trading FX markets? Would you know? And, and it's absolutely fine. If you're a new trade and you don't know, you can put that in the chat box that, you don't know, you don't understand it. Let's be honest, that's why you're here. All right. These sessions are for education. All right. So there's nothing wrong in that, but maybe other people have had a little bit of trading experience that, they want to talk about, or, that they understand what it is. They can basically get their sanity checked on what they know and understand. So think about it, maybe put in the chat box, why do you think the dollar is so important? But, as the slide says, many new traders, they can be aware of the importance of the US dollar, but maybe not really fully understand the entire significance of it to financial markets. And I mean, not just FX markets, but the actual overall, let's call it kind of like the global financial ecosystem. Really, it is important for anybody trading FX markets to recognize the role that the US dollar plays, not only in FX, but in international trade and other markets. And what we'll do is today is we'll explain why the US is so important in FX trading and how you can utilize that to your advantage, okay, especially for new traders as well. We'll talk about, how we can set up, a kind of profile to help us, just give us a little bit of insight and help with, utilizing this information and, and turning it into trade ideas. So Rodrigo says, are you going to send the PDF with the images? Thanks. Rodrigo, no, we don't. But what will happen is this video is, this webinar is being recorded. Then what will happen is you'll find it is up on the Admirals YouTube channel, probably in the next day or so. And what I suggest is, go look at it. And, and if as you're going through it, you can take notes. And also maybe you can take a screenshot if there's one or two pieces of information that you'd actually really like to sort of, to take on board and keep for your let's say for your own trading delectation. So I hope that helps. I hope that helps you there. Okay, you're welcome, Rodrigo. Great to have you here. So, why are people interested in the US dollar? People are interested, but your question might be why. At the kind of the bigger picture is that you'll find, many international trade deals are settled in US dollars. People forget that the FX markets, we as traders, we're effectively speculators. We are engaging in that market in a way to hopefully generate profit for our own trading business. But the reality is the FX market is there to effectively, to lubricate the wheels and the cogs of international trade. And sometimes we as FX traders forget that, okay? Its main thing is about helping make international trade easier. And as it says there, many international trade deals are settled in the US dollar. What you'll also find is many international debt obligations, they are also settled in US dollar. If you've got a country that is having difficult with its economy, with its currency, and they actually, they need to be bailed out, okay, whether it be by a nation or by an organization, maybe the IMF or the World Bank, etc. What many of them will find is that, of course, the terms of the deal will be that the debt is repaid, okay, or the debt is basically balanced in US dollar. That starts to make it interesting, and we'll come back to that a little bit later and have a little bit more look at that in detail. Oil, okay, even though we may live in a world where everybody thinks that we're living in a kind of world of renewable energy, which we are far from doing so, okay, oil is still here and is still going to be here and important with us, for at least the next generation, I'd say, and the important thing is oil is settled in US dollars, all right? Oil is settled in US dollars. And going on from that, what you find is all the commodities are priced and settled in US dollars, whether it be gold or platinum or corn or wheat, they are priced and settled in US dollars. And there are other microeconomic factors that play, but altogether, this starts to be, as I said, the US dollar is effectively the oil of what basically lubricates the international trade. That's what we hear, and that's why the US dollar. And if you wanted to go into much deeper details around that, okay, and why it's become so important, well, I mean, you could look into things like the Bretton Woods agreements, etc. Okay, there's, if you're a real, if you're a particular interested, in that. But for the purposes of today's session as an introduction, it's just important to know is that you might not realize it, but an awful lot of your world, your life, is basically driven by the US dollar. You might not realize it, you might not understand it. Okay, you might have just taken it for granted, but a lot of the stuff that you use around you, whether it's oil to put in the car, whether it's everything to be moved into, whether it's basically whether you're doing, cross-border trade deals, etc. Whether you're buying gold for presents, etc. What you have to realize is that you are exposed to that US dollar. And if you're trading in FX or if you're trading in commodities, and I also I'd suggest probably crypto as well, well then you are involved in a trade with the US dollar. All right, there is a part of that is a trade with the US dollar. People forget that. Okay, they sort of get glib about it. They don't really fully understand it. But you're going to learn and realize that the US dollar plays a huge part, in all of our lives. All right, in one way or another, and hopefully maybe this will help you with that. So I think Musolum says, how about the Chinese yuan and their commodities? Listen, you will find that increasingly there are some deals being done in the Chinese yuan, and certainly what we've seen in some countries would be very glad to move away from the US dollar, but that's probably outside the remit of today's conversation. Okay, but certainly I would say really for for the next generation or so at least, perhaps even longer, is that the US dollar is king, and we will talk about that. But with that, that's why it becomes so important for FX traders to understand, okay, the US dollar and its many intricate relationships. Okay, your ability to understand this will help you trading just in generally, but also trading FX markets as well. So, if we take a little look at, what are the most popular traded currencies in the world? Well, hopefully just very quickly, you can see that the US dollar there, all right, is over a third, okay, in terms of most popular traded currencies. And actually what you will find is, even though when you're looking at euro, Kiwi, Canadian dollar, Swiss franc, Aussie, sterling, yen, etc., the vast majority of those traded currencies is in fact trades with the US dollar. All right, okay, that's what you will actually find. And if you wanted to go into deeper detail about that, you can do, okay, but in terms of understanding how they actually, let's call it the kind of fundamental underpinnings of the foreign exchange market, you can do that. But today we're just going to try and keep it kind of as light as these things can be, so basically people can just have a little bit more understanding of A, those FX markets, and B, why the US dollar is so important. But hopefully you can see that very clearly. US dollar, most popular traded currency in the world, and it can be ranked there, as you can see. US dollar followed by the euro, yen, sterling, Aussie, Swiss franc, Canadian dollar, Kiwi dollar. All right. What happens is, and this is for very new traders, this is worth sort of taking note of, is when those number 2 to 8 currencies trade against the US dollar, so maybe it's pound against US dollar, dollar against Swiss franc, these are known as the majors. All right, and that becomes important later on for us. But when you hear traders talk or analysts talk about trading the majors, that's what they're talking about. It's talking about those other 7 currencies in the trade against the US dollar. When you're trading between those levels, okay, between numbers 2 to 8, well, actually what's happening is that is a trade known as the minors. Okay, when you're trading, CAD against Swiss franc, that is known as the minors trade. And then when you're trading any FX pairs outside of these, okay, outside of 1 to 8, that's what generally tends to get termed as the exotics in the FX market. So just so you sort of know and understand and get a little hint of that. So, we just had a little bit of a look at, just a little bit of scratching the surface of it, but, it still has to understand, why is that US dollar so popular? Well, what we have to remember is that the US dollar is the reserve currency of the world, based on what is still the largest economy in the world, the US. Ask me whether that'll be the same 20 years from now. That's interesting. That's another conversation for another day. What we're really just interested on is that today The US dollar is the reserve currency of the world, right? And it's because the US economy is still the largest economy in the world. As we've touched on before, commodities, they are priced in US dollar, both soft and hard commodities. If you're not really sure what soft and hard commodities are, then go into the YouTube channel there for Admirals. You'll find I did a piece, I think it was about maybe a year ago, which was all about commodity booms. And that was basically what we're looking to do. So in order to, as I said, in order that international trade, okay, and that commodities are settled in dollar, all countries need to hold the US dollar in order to facilitate commodities purchases and trade deals, and other global trades. So basically, that's one of the things that underpins it as a reserve currency. Okay, namely that you need, banks, okay, both central banks and global banks, they need to hold a certain amount of US dollars in order to basically, as I said, to facilitate and settle those purchases or those particular trade deals. So the US dollar is the #1 most popular currency, and every trade is literally one currency against the other. Then which the most popular currencies to trade against the US dollar itself? Not unsurprisingly, okay, it is quite similar to sort of the graph we looked at a couple of slides ago. What you're seeing there is the euro against the US dollar makes up the news, and in fact I think the euro against US dollar is probably the single most traded product in the world. Then you've got dollar against yen, pound against dollar. Okay, those are the top three, and you can see for yourself. Okay, even like Aussie dollar, then dollar CAD and Kiwi dollar. We can see that those they are all trades against the US dollar, and I think the US dollar is it's basically involved in more than 50% of all FX trades. The US dollar is involved in some in some particular way, and so it's just all adding to this tale and story that. Yeah, the US dollar is unbelievably strong, all right, or unbelievably important. So if you're a new FX trader, it's important for you to sort of grasp and understand and work out how that works and how you actually need to be able to utilize that in your own trading. So, as we said, the dollar is king in the FX markets, all right. You'll sometimes hear me talk about it. The dollar is the big gorilla, right, in the FX market. Okay, all right. So you're always looking to try and understand. Is the gorilla asleep? Right? Is it awake? Is it calm or is it angry? All right. Okay, and because that's one way just to understand, because you don't want to particularly getting into a fight with it. All right, but as I've just said there, more than 50% of trades in global FX markets involve the US dollar. What we're going to focus on in terms of being able to turn this into trading ideas is we'll focus on the majors. Remember what I was saying there earlier? That's about those kind of 2 to 7 other currencies trades against the US dollar. Others are known as the minors when you're trading euro against the yen or sterling against Swiss franc, etc. And then outside of that, you've got what's known as the exotic. So that is when you're trading the Brazil, the Mexican sort of Hungary, etc. We have to remember in that FX markets that unlike the stock market, the FX market it doesn't have a physical location. You don't all go to one central exchange like the New York Stock Exchange or the London Stock Exchange. All right, it's known as over the counter, right, and it runs 24/5 and is the biggest market in the world. And depending upon what numbers you take from the Bank for International Settlements, okay, there's still talk between about $5 to $6 trillion, okay, every single day is transacted in the FX market. And you think about that is just it's an astonishing number, okay, an astonishing number. And you as a trader, you're only just trying to catch a mere sliver of that. And that's what we'll focus on for the vast majority of the rest of this particular session. So what is also important to know is, remember we were saying earlier, is that because the US dollar is the reserve currency of the world, that means that basically countries and companies, okay, and banks, they have to hold reserves, okay, they have to hold FX reserves. And you can see that 62%, almost 2/3 of all those reserves are held, okay, in the US dollar. And then you're looking at sterling, yen, euro, and a little bit more. And this becomes important, especially let's say with some of the torrid things that are going on in the world at the moment. as you look at the sort of deeper story, okay, and the narrative that's going on there, what you'll start to learn and see is that, in fact, of course, in times of strife, it becomes important not only to see, what countries have in their reserves, but banks, actually what even individuals have, in terms of their own reserves. If there's a problem, or if there's a refugee problem or a flight to safety, etc. And as you can see there, it is still effectively US dollar, all right, 62% of all FX reserves are held in the US dollar, right? And I mean, someone made a comment earlier about, the Chinese yuan. I don't see that happening. I don't see that changing massively anytime soon. Maybe in a generation or so, but, certainly it's a case of what we will see. What we'll see is that, certainly I think for at least the next generation, is that, the US dollar is still going to be the reserve currency of the world. Okay, it's still going to be that, what most international trade, okay, and what most oil and other commodities deals are settled in. It's still going to be what countries, companies, banks, individuals hold in terms of their own FX reserves. Okay, I don't think that's going to change in any way, shape, or form. And so it's important that we kind of understand that and build that into our kind of methodology of how we look to do business within FX markets. So hopefully, you've, from the slides we've talked about there, you've seen exactly, why the US dollar is important, right? And understanding that, it is the oil's the wheels of international trade. It's what, debt obligations can be settled in, okay? It can be what commodities traded in, certainly what oil is traded in, okay? So, all of these things that make up the modern world and the way it works, they're all underpinned by the US dollar. So, it then becomes common sense for us as traders, as FX traders, to sort of work out, well, how do we monitor the US dollar? How do we actually take a snapshot of how strong the US dollar is? And there are quite a few ways, and certainly there's fundamental economic news ways that you can do so. But one of the easiest ways for, let's say, ourselves as private traders to do it is to use the US dollar index. Okay, you might find it, it might be ticker D as a USDX or DXY. You'll hear traders talk about it as the Dixie. Okay, that's what it'll be known. And what it is, right? What the dollar index is it's a measure of value of the US dollar versus a basket of currencies. Those basket being the euro, Swiss franc, Japanese yen, Canadian dollar, British pound, Swedish krona. Okay, and I think it's about 58% of it is based upon the euro, and that becomes interesting, which we will look at when we switch across to the live charts. And what as it says there, the value of the index is a fair indication of the value of the US dollar in the global markets. So the dollar index came in, I think it was about 73, Bretton Woods, etc. As I said, if you wish to read more about that, and it is fascinating, you'll find that there's plenty of material you can go away and read it. Really, today, all we're saying is, I want you to be aware that this is the dollar index. Okay, this is something. If you're going to be trading FX markets, this is something you need to be on top of. You need to build it into your watch list. You build it into your routine to be able to look. Certainly for myself, okay, those of you who may have come to my other my kind of market analysis sessions, when I'm looking at the FX market, first chart I'm looking at is, right, what's the dollar index doing? Okay, what is the dollar index doing? That is just, it's a clear thing to be able to help me view the dollar and actually understand, what the relationship is with the dollar with other currencies at the moment. So, here is a chart of the Dixie. Okay, and this is the weekly chart. You'll find, quite often I do an awful lot of work on the weekly chart. I love them. Okay, I love all charts basically. I'm a trader, but in particular, I do like the weekly chart. And what we see is that basically the dollar index there, it has always been referenced against 100. All right, let's just get the old drawing tool up here, shall we? And it has always been referenced against 100. Okay, so effectively, when the dollar index has been way above 100, right? Well, that just is an indication of of real strength in the US dollar, and normally that means also the US economy. when the number has been, really very low, okay, then invariably that's an indication that the dollar is particularly weak, or it has been weakened. And there are, as I said, there are implications for that, okay, both when the dollar is strong, right, and also for when the dollar is weak. If you remember, if you think about it, okay, when basically the dollar is strong, well, just think what implication that has, okay. You start to normally, very often you can see that, that can also at times, depending upon the environment, that can be linked to also, high oil prices as well. What you'll also see on the other side, remember what I said right at the start, is that a lot of international debt obligations, okay, they are settled in US dollar. So if you're an emerging market, an emerging market currency, well, then the stronger the dollar is, the more pain that puts upon you, because let's say you're a country in the Far East and you have, South America, etc., and you have a huge kind of debt to pay. Well, then invariably, if the US dollar is stronger, that means, your debt payments are higher, which means if your debt payment is higher, that means, the money you have within your own economy, you can't invest it in your own economy because you're too busy paying, debt repayments. So that has an impact once again on basically, on your, let's say, your country, your economy. So, all of these things, it starts to build a picture of those intermarket relationships and actually how important they are, and actually also how tradable they are as well. So as I said, this is the dollar index, okay, and you can see we had a fair bit of volatility around at the start of the kind of COVID lockdowns. And then basically price, as you can see, basically the dollar index dropped away there quite significantly, and down to around about 90. And what you probably find is over a lot of the last few years, it has traded between about kind of 90 to 100. And you can see for yourself there, okay, we had a double bottom, that pretty big double bottom there on the weekly chart. And what we've seen, all right, since basically May of last year, is actually what we've seen is that, isn't it? We've seen this strength in the dollar, and we're up, sort of nudging our way towards towards 100 and stuff. So, that it immediately gives you an indication, right? Well, hang on a minute, overall on a longer term, the dollar is actually quite strong at the moment, all right? The dollar is strong. Why, why is that? Well, there's elements of the economy, there's elements of supply shock, there's elements of there's a war going on, there's elements of, there's been basically, real huge price hikes in commodities, okay, that has an impact. We've got issues with inflation coming in. There's a whole host of macroeconomic factors that are all playing in, all right, they're all playing a part. But what we want to be able to see as well, actually, you can hopefully see that on a weekly chart for almost the last year, we have had dollar strength, all right. And if you're trading, say if you're like a swing or a long-term trader, you might be thinking, well, I don't particularly want to fight that, all right. That's not if the dollar is that big gorilla and it's angry, it's running away, I don't want to get in a fight with that, okay. Actually, what I want to do is I want to find a way to run with it, not fight it. Okay, let's not make trading any more harder for us than it actually needs to be. All right, let's just let's try and keep it as nice and as simple as we can. So as I said, the dollar index gives you a great indication, all right, of what is the present role of the dollar. All right, gives you just a great snapshot. Okay, and as I said, even for myself, when I open up FX charts, the first one I'm looking at is the dollar index. That's the key one, and I would recommend you do the same. So I kind of alluded to it earlier, is that, we can monitor the US dollar by the dollar index, but also one of the other ways we can do is to monitor the emerging markets, all right? And you can do that with the chart of EEM, which is about the Emerging Markets Index Fund. Remember what I was saying just a short while before, okay? Namely that, if the dollar is strengthening, that means that debt repayments are going to be higher. Okay, it's going to be tougher. Money is going to flow to the US, okay, rather than flow to emerging markets, and all of that has an impact, right? And you can see that in the chart of the EM. So if you remember, we just looked at the dollar index, and the dollar index, its first move post-COVID was basically to the downside, whereas actually what we saw is that, as the dollar weakened, well, hey, presto, what we saw is the emerging markets index, okay, rallied and got way up above, the recent highs. As that then reversed, okay, remember we looked at the dollar index had a big double bottom before it rallied. Here we on the emerging markets, we had a bit of a double top there, didn't we? Before what we've seen over the last year is basically, the kind of the emerging market index sort of just dropping away there, and you can see that's actually accelerated, okay, over the last few weeks. And a lot of that will be linked to the conflict we see in Eastern Europe there. So, by basically being able to look at the dollar index, being able to look at the emerging markets index, okay, you very quickly, you can get an idea of, what is the position of the dollar, right? Is the dollar strong or is it weak? At the moment, what we can see there, at this particular moment, the dollar index is strong. We can also see the emerging market index as being quite weak as well. That's just confirming and backing up the story, and all of that starts to help us build a picture of, A, the US dollar strong, B, what is the present US dollar, what is it, what's its trend, and then C, well, how do I utilize that? How do I use that information to help me trade better? And that's what we'll take a look at in a couple of slides. So, yeah, as I said, how do we use this information? Why is it important to us as traders? So, what we can also know about trading in particular is that actively traded pairs have higher liquidity, all right? And liquidity isn't necessarily that important to us as private traders in the sense that people, in the way sense most people think. But if you're a trader in a bank, Goldman Sachs, JP Morgan, one of the big desks, okay, if you're you're at a big treasury desk, liquidity is important because you're putting on big trades, and what you want to be able to do is to know that you can get your trade on at your level without very little particular slippage. So actively traded pairs tend to have high liquidity, which we'll explain a bit more in a slide or two's time. Also, what we find is those very actively traded pairs have more interest because it usually means it's easier to buy and sell in the FX markets, okay, if they're an actively traded pair. What also is important is high liquidity tends to equate with lower commission costs, and that also helps generate good trading conditions. So things like lower spreads, minimum commissions for rolling over positions, what they call a swap, or no or small commissions for opening a trade, and you generally tend to get good trade execution. And this is how we start to sort of, bring together, what we've talked about, and actually in terms of, how we utilize this in our own trading. What it also means is that, in terms of those actively traded pairs, which if you remember from our first couple of slides, what I was saying, what are the most actively traded pairs? Well, it's like euro against dollar, dollar against yen, pound against dollar, okay, dollar Canadian, all right, Aussie dollar, Kiwi dollar, all majors, all right, all of those trades against the US dollar. What it also means is, you get a lot more focus on those particular currencies, which means you get more analysis and expert opinions. That can be both a blessing and a curse. I'm the first to admit that, all right? Sometimes, because sometimes, you can find 10 articles that tell you it to buy. You can easily find 10 articles that tell you it to sell, all right? So sometimes it can be very helpful. Sometimes it can be confusing. But what it does mean is just you're getting more focus, all right? If it is of interest to you, you're getting more forecasts, more trading signals created and published for more popular pairs. Get more focused coverage of events in the news and media relating to those pairs, and more trading guides and education focused on those pairs. And the truth is, all right, in the FX markets, those, actively traded pairs are the majors, right? They are the majors, okay? The majors, that is basically euro against the US dollar, it's pound against the US dollar, it's dollar against the Japanese yen, dollar against the Swiss franc, it's Aussie against the US dollar, Canadian dollar, US dollar against Canadian dollar, it's Kiwi against US dollar as well, okay? It's the majors. Those are the most actively focused pairs. This is where we start to think about, how we can narrow down and focus our own endeavors within FX markets. What also helps, okay, and I appreciate, I'm talking here from the UK, so I'm kind of, London is still the global FX main spot. But what we also realize is that, some of those currencies is also the time they trade related to their geography. The European session, all right, which is, you might say, is from 0700 to 1600 sort of UK time, with focus on the kind of early morning. It is still the most popular trading session, followed by the US session, which is from about 1 o'clock onwards UK time. What you'll find is when you see is there's a crossover between the European and the US session, that's around about 3 to 4 p.m. London time. So you've got the US traders coming in, they kind of get towards the close, what they call the fix, okay, in the European session. But what it does, it also gives you overlap of the European and US session, and that's useful knowledge for traders, especially if you're going to look to focus on trading the US dollar. So what we have. What you can see here is just a quick map, which you can all see is that, we have the London session, okay, running out after about 3 o'clock into 4 o'clock. But that also, you have that overlap here, okay? And also, you have the Asian session overnight. The important thing for us to know is FX traders is that basically, that trades 24 hours, but, okay, the majority of that trading is basically the European session, start the European session, then the kind of the overlap of the European and US session. That's where we get a good deal of the business done. So, and this is what we're going to do. We've got about 5-10 minutes left. What we do is, in terms of how do we work this as well, the first thing you can do is to set up a profile that just focuses on the US dollar, and you can do that on both the MT4 and MT5 platform. As always, okay, once we've done that, you just have a simple plan. You identify levels of support resistance from the daily chart, all right, if you're a complete beginner, right, and then study for correlated trends within those US dollar majors, and we'll be able to look at that in a moment. And really what we want to do is identify, is there a US dollar trend? Remember what I was saying earlier, keeping an eye on the dollar index, keeping an eye on the emerging markets index. Just being able to look at it and just, as I said, the US dollar, treat it like the gorilla, right? Is it asleep, all right, and nothing happening? Is it awake? Okay, it might be moving. Is it calm or is it angry? Okay, when it's volatile, all right. And as I said, your job is to you want to run with that gorilla. You don't want to be picking a fight with it, okay? Because it's such it's a juggernaut, okay? It's an absolute juggernaut. And as I said, look to trade in the direction of strong US dollar trends. And if there isn't a strong trend, that's okay. You can go and look at something else. But, normally you will see that there is some sort of strong US dollar trend. In which case, that gives you the opportunity to either trade breakouts or pullbacks for your entries. And, you can just use price action and candlesticks for triggers, but also ensure you manage your risk. If you want a bit more information on how to trade breakouts, pullbacks, price action, candlesticks, once again, go to the Admirals YouTube channel and you will find a plethora, all right, okay, of fantastic content in there that you can utilize to help you, basically, just increase your education, increase your knowledge and understanding about how to particularly utilize those. So how do you use all that information to trade? Well, just to kind of finish, well, what I'd say suggested that new traders should focus on trading the majors, right? That's those 7 other pairs against the US dollar. Why? Lots of liquidity, so you're not going to have an issue with getting your trades on. There's usually enough volatility as well for your trades. Because of that, you've got tighter spreads than what you're trading when you're trading the US dollar majors. That's that is a cost of business. At the beginning, you might not be thinking about it, but a few years down the line, when you're trading big positions, stuff like that becomes of interest and becomes of useful. There is also plenty of research, okay, on the US dollar. Every man and his dog is providing it, so you're never short of it. And that effectively will make you a US dollar trader. And actually, that's okay. That's okay. All right. Just think about it as what we've talked about there in the session is that just how many you can see, how big the US dollar is and how, effectively it just, it runs that FX market. So, why wouldn't you want to focus on trading the biggest, the biggest currency within that pond, okay, and being able to sort of, turn that into the way you go about doing business. And also it means it's easy to follow formal news because there's plenty of news coming out around the US dollar all the time. There's also plenty of research on the US dollar to study, depending upon the level you like to go into. And in some ways, it actually makes it easier to avoid overwhelm because you're just going to focus on the US dollar, focus on the US dollar, focus on the news, focus on the trends, focus on the, the economic fundamentals. To do that just allows you to basically just narrow your focus, and narrowing your focus can help you enormously as a new trader, because I appreciate when you're a new trader, there's tons of stuff going on, right? There's a plethora of stuff, just, almost information, and it can lead to a bit of analysis paralysis. Whereas actually being able to just focus on, the major product within the FX market, that might just basically help you just formulate a simple plan that you can follow. So in conclusion, we're going to switch across the charts in a moment. Is that the US dollar is king when it comes to the US markets, all right? Okay, when it comes to all markets. It's also important to commodities, fixed income, debt markets. So an FX trader needs to be ensured that they are covering the US dollar. You need to know what's going on, right? You need to have it as a big part of your analysis. Easiest way to do it is with the dollar index, but you can also use the emerging markets, because you just effectively got inverted picture there to just confirm it. And as I said, if you're a beginner in FX markets, well, I would just suggest focusing on the majors, right? Just to give yourself that little bit of insight, a little bit of help without becoming overwhelmed. So why don't we have a little look at the live markets for the last couple of minutes, and I'll show you how we what we're going to look at. If you've got any questions, you can of course always email us at global@admiralmarkets.com. So just bear with us a moment. We'll switch across the live charts and have a look at what's going on. I'll show you how a profile I have on my Admirals platform that you can set up yourself. So just bear with us a moment there. Thank you, Ahmed. That's very kind. So what I have here, this is the Admirals MT4 platform, but it could be the MT5 platform. Okay, it's not really, it doesn't matter whether it's MT4 or MT5, but hopefully down here at the bottom, you can see that this is a profile I've set up with the US dollar. And what I have here, I think I've got them all set on the 4-hour charts here. And what I have, I'm just going to move myself across out of the way. Okay, so I'm not that important. You want to be able to see what's going on here. What I have down here is the USDX. Okay, that is the US dollar index. And what I have above it is the euro against the US dollar, because remember what I said is that the euro makes up about 57% of the dollar index. And what actually happens is you pretty much get an inverse, or you get an inverse picture, an inverse correlation. So when the US dollar index is going up, the euro dollar is going down. Okay, and we'll show you that a little bit more in a moment. But then also we'll have the US dollar Swiss franc, also the US dollar Japanese yen. These two, Swiss franc and Japanese yen, they are safe havens. So when I see money pouring into them, that's just giving you an indication of, a bit of an understanding of the kind of risk on, risk off sentiment and mentality. I have pound against US dollar here, and US dollar against Canadian dollar here. And then at far left, I have Aussie against US dollar and the Kiwi against US dollar. Those two basically commodity dollar currencies along with the CAD. And they tend to sort of, they tend to follow in lockstep. So, as I said, here's I've got a 4-hour chart here of the dollar index. And I don't actively trade the dollar index itself. I will occasionally, but I don't actively. What I do use it as, I use it as my analysis tool to work out what is the dollar doing. Is it strong? Okay. Is it weak? Okay. Is it, as I said, is it asleep, or is it awake and angry? Okay. All of these things are, points I'm interested in, because I want to understand, what on earth is going on, and how can I trade that? Okay. And so what I see is, remember, what we've actually just seen there. Let's get the old tool, is that basically, prices rallied up, and now it's in a, you might say it's in an ascending triangle after an uptrend. Okay. So I'm just waiting for it to basically see, is it going to crash out of it, or will it pop to the north? We'll probably find out over the next few sessions times. And on the flip side of that, well, then I have, euro dollar, which is, as I said, is actually in some ways, it does the exact opposite. Here we've got it basically, it's going down and bang. What I'd say is we have almost, excuse my drawing, what you've got is, you've got effectively an ascending triangle there at the end of a downtrend, just a little bit like we saw there. And it's basically coiling up there, getting ready to make a move. And that's what I'll watch. But, by watching the dollar index and the US dollar, okay, dollar index and euro dollar, you get an opportunity to sort of get a picture on a lot. Remember, euro dollar It's probably the biggest and most actively and most liquid traded instrument in the world. And when you've got it along with the others, as I said, you can see, what is the, how the price flows into either the into the safe havens of the Swiss franc or the Japanese yen. But on the flip side, when the risk is on, what we can see is, if I just bring this up here, we can also see is when the risk on mentality is on, as you can see, basically how much price is pouring into effectively the commodity dollar currencies, which is what we can see there. And the Aussie dollar, you can see, bang, for the last few days, there's been a real very strong trend there. Okay, there's a real risk on trend there. When we get the risk on, well, then there's money flowing out of safe havens, flowing out of the US dollar into the risk on currencies, and you can see that. And as a new trader, even just being able to understand the risk on or risk off mentality and how that plays out for the US dollar, that can be enormously beneficial. As I said, you want to be able to find trends like this within those major US dollar pairs. You don't want to fight them. You actually want to try and ride with them as and when you can. So there you go, ladies and gentlemen. We've sadly run out of time. I hope you find that useful. It's giving you just a bit of insight into, why the US dollar is so important and actually how we, can turn that into a trading advantage for ourselves. So go away, all right? Set yourself up a profile like I have there with the US dollars. Just do yourself a little bit of analysis. Just give you an idea of what is the US dollar. Because if you've got a good grasp of what the US dollar is doing, well, then that actually is a great base from which to trade other instruments. Okay, as I said, if you're a new trader, I'd focus on the majors to begin with. But then as you grow in experience and knowledge, well, then maybe you'll be looking at the minors, maybe then you'll be looking at the exotics, etc. As always, I wish you the very best of success in your own trading, ladies and gentlemen. I hope you have a fabulous trading week, and I look forward to speaking to you soon. Trade well, everybody. Cheers.